Welcome to TradeTheNBI.com. This is John. This report is for the 20th of March. Well, it's already getting active. Friday we had the push up against that same 4009 algo level and not able to penetrate it. And once the selling started, we ended up with white NBI pushing out over it by the close of Friday. And, that's suggesting a move down to the 0%. It's a tough call right now because you've got two camps. One thinks that quantitative easing is going to start up again, rapid force, because of the serious banking collapse that's taking place worldwide. Um, the other camp is like, well, that's going to generate a recession, and obviously you're going to have a significant impact to your economies. So, are things overvalued? Better still, it's unpredictable how severe things will get. When you have, Credit Suisse going under the way it is, what I've been talking about for how many years now about European banks being just dead men walking. Um, a lot of them, claim that they have all this great capital and everything, but the reality is a lot of it's tied up in euro bonds and other worthless junk. So once those fade, the question really is the ECB prepared to, cover everybody and backstop it? I mean, in this case, the Swiss government did to a large degree. USB buys it up. Okay, fine, but that doesn't change the fact that you've got serious contagion growing, even if the Fed provides liquidity, because it becomes a confidence issue. And do they slow lending? Does it tighten up? And when you're talking about small banks, you're talking about most small businesses, and that really will cripple an economy so fast. Um, no two ways around it. So, yeah, futures opening up minus 30. At this point, they were as low as minus 40, which again puts you at zero return for the year on the S&P. So, well, bonds are more attractive at that particular case, even with inflation running what it is. Um, no question about which play becomes safer. At least there you have some capital preservation. From an NQ standpoint, um, not as significant a pullback. And this is the disparity between the S&P 500, and I think it's that broader market that's more of a concern than tech in this particular case. And I think you're seeing that difference. Um, we look at treasuries, still out of whack. We had a pullback here, but again, this flight into that capital is going to reduce yields, particularly if they think the Fed is now going to stop and or soften. Um, Peak yields theoretically would be in. Now, that is a separate question, whether or not the Fed is just going to provide this liquidity, which effectively is quantitative easing, without actually changing its policy and or moving rates. So we'll see what they say directionally. Um, but the bond market has been wrong for the most part. Um, or they're going to say they were correct, they were just early. That's all relative, right? Oil continuing its decline, and that is a bonus for the economy, or it's an indication that you have an economy that's stopping. Not really seeing signs of that per se. So I just think that the arbitrary elevated levels and the supply constraints are finally beginning to get eased now that they've had enough time to circumvent them, and I think that's allowing for conversion back into it. And what this represents is what we've been talking about. From back over here, we knew that gold was going to explode at a certain point, and it was just a matter of waiting for it. And here it's finally taking place. And not surprisingly, at the end of the day, you have two choices. You got crypto, you've got gold. Obviously, you can stay into fixed assets like real estate and that for the appreciation. But the question there is, are you overpaying for the current value based on if things slide? So gold, shooting up now over 2K. Not too big a surprise on there. The euro surprisingly holding up very well, and again, this is that liquidity support that the U.S. is providing, and it's pretty much unlimited. So from that standpoint, you can't go wrong, and it's going to bolster the euro. But I think that it's an equivalent understanding, though, that other than the ECB buying up its own debt at a certain point here, there just isn't going to be anyone in Europe, at least, clamoring for that. So. It's going to be anyone's guess as to how far that goes before people just realize that the money's worthless for just a question of confidence. And that's what most currencies are anyway. And that's also causing Bitcoin skyrocket. Some people think it's headed for its $1 million mark. And, that's not entirely impossible for this to accelerate rather quickly because there's not going to be anyone who wants to get rid of it and more people want to get a hold of it. Because even if you're going to sell, what are you going to move into? You're going to move into, euros? I don't think so. So, yeah, that's the best case scenario for cryptos, sort of playing itself out from this banking setup. And we knew it was coming. It was just a matter of how it would emerge. And particularly if people lose faith and start pulling funds out of bank accounts, even if they're putting them into the bigger banks, that redistribution still adds to a volatility and can create significant problems because at a certain point, what do those banks do to invest those funds? It becomes more problematic as it gets larger and larger. From a ETH standpoint, similar move, but not quite as strong. So this is where Bitcoin really outperforming in a significant way. And of course, TSS, it's a question of having to get rid of the cache on my TS, but I don't want to do that because it's multiple years of data that you can't get when you reload charts. So it's a tough one to make that call. But it only works periodically, and of course, even though I've saved to eliminate the backups, it did it again, and it's a fantastic thing. Technology all around. We'll figure it out. As always, though, look for me in the Skype chat. Trade well. We'll talk again later.